Welcome to Real Estate Success Partner. We're your hosts, Devin Dubuc,
David Nguyen,
and we're here to talk about how to have great success in any market. Today, we've got a really amazing guest here on the show, just a leader in the mortgage business, done some amazing things. Jeff Bode, CEO of Click and Close Inc. Jeff, welcome to the show. We're super excited to have you here and understand you're doing some really amazing things in the market right now. But, first off, David and I know who you are, but, some of our followers, they may not know Jeff Bode. So, Jeff, we'd love you to, tell us a little bit about yourself. What's your background? What have you been doing? What do you do in the mortgage industry?
Well, Devin, thanks. It's great to be here. I started out in the business in Oklahoma back in the 1980s. Was in a savings and loan business. Things got pretty rough in Oklahoma in the 80s. So oil and gas were the two industries that were there, and they both went to hell pretty fast, so I decided to come down to Texas, where we had a little more diversified economy.
Yeah.
Upon arriving here, I set up a joint venture with a bank in Frisco, Texas, to originate mortgage loans. That worked out well. Then I had the opportunity to acquire a company and did that in 1989 and set up the original Mid-America Mortgage.
Okay.
With that, we grew from just a retail lender to later on doing wholesale lending. We set up an interface with Calyx Point, where we were able to allow brokers to actually price, underwrite, and prepare closing documents inside our portal. So that was a very state-of-the-art at that time. And we had success with that, and I was able to sell our business to Aegis, and Aegis acquired that in 2003. Worked out very well. I was proved I was unemployable because I I had difficulty working for somebody else. So within about 10 months, I left Aegis and got back in the mortgage banking space.
Very cool.
As well as I got in the tax lien business, ran that for a few years. We became the largest originator in the number of loans after we entered that business within 2 years. And
of course you did.
And it was very successful, and it worked out well. Later on, I sold that business as opportunities came up in the mortgage banking space that were better after the crash. But I was able to kind of get through the crash by being in the tax lien business. That worked out well. Technology has always been an important part of what we've done in mortgage banking space. We have our own loan origination system that allows us to do a few things beyond what others do. We're active in buying scratch and dent loans from other lenders that have problems selling their loans. We securitize a down payment assistance program for consumers that allows for a no down payment program for FHA loans, and been happy with that. Recently,
real quick,
okay.
Jeff, you had mentioned Mid-America Mortgage, Click and Close Inc. Talk to me a little bit about that. What's so Mid-America to Click and Close? How does that happen? What happens there?
Well, the reason we actually changed our name from Mid-America Mortgage to Click and Close Inc. A lot of that was we have developed a lot of technology that we're planning on rolling out in the next couple years. Things that we think will digitize the process of mortgage banking, that will give us more certainty that we've got an approval for everybody all through the process. Currently it's as good as the originator you've got to know that you can get that loan closed. We're trying to take more uncertainty out of the process and make it better for the consumer.
Automation.
That's correct. Through automation.
Yeah.
And automation through just a digital process, keeping, the title insurance business is digital, the mortgage business is digital, but we're not digital together.
Yeah, that's true.
We give them a PDF that they have to close off of. They give us back a commitment and a title policy that's a PDF instead of keeping it in a digital format. So things like that.
Streamlining processes.
That's correct.
Taking them to the digital side.
Correct.
Right? Making processes easier for the consumer. Maybe making processes easier for the originators.
Yes.
Does that mean that things might move a little smoother, loans could close quicker, more efficiently?
That is the plan, to keep that certainty. Whenever that LO gives the approval, we can keep digits flowing back and forth between our vendors and ourselves and the realtor.
Security?
Whatever. Yes, keeping it secure all the way through.
Yeah. You're making people safer.
That's
You're giving them an easier process. You're developing this technology, and you're trying to innovate the market.
That is correct. If it's not safe, it shouldn't be done.
Yeah. Yeah, no, those are facts. Man, that's great. That's great. So Click and Close Inc. Is where we are today. Click and Close Mortgage, Title,
Correct?
Technology.
Yes.
Okay. Okay. So a lot of stuff going on right now.
Yes.
But you're bringing these digital products to the market. I think maybe it's another product that we talked about that you're starting to introduce to the marketplace. Let's talk about that. What do you got cooking in the kitchen?
Correct, Devin. The attorney's opinion letter is the solution. As you recall, I started out in the savings loan business in Oklahoma. When I was there, we used attorney's opinion letters, and that's how we did all of our business. We based it off of the attorney reviewing an abstract and said, okay, this is clear, this looks good, you can go ahead and close a transaction. It was substantially cheaper than a title insurance policy. And the title insurance policy, it gives a borrower 100% certainty, but gosh, we found that with the attorney's opinion letter, we were just as clean. We never had any claims that would happen. The attorney would review everything, look for any potential problems that were out there. So there never was a claim.
So you've got experience with this in the past. You've
Correct.
used it in Oklahoma. And now there's something going on that's allowing for you to potentially bring this back to the market. It's in lieu of a title policy, right?
Correct.
So how do we make sure if we're eliminating a title policy, our borrowers are secure, our borrowers are safe, right?
That's a great question, Devin. And the reason we can do that is that we're going to look at that type of transaction. We're going to look at the previous 4 transactions that occurred or anything that's happened in the last 10 years to determine, okay, was there an estate that was settled and they didn't use a probate to settle it, that they might have used a affidavit of heirship.
Okay.
Well, the affidavit of heirship, we don't really know that all of the heirs are included, but that person signed that and they're getting a lot of money for signing that. So unfortunately, they've got a reason to defraud people. Money is a big motivator.
No question about it.
And if we can take out those transactions, and frankly, I'm fine with leaving those in a title policy.
Sure.
I own.
So it's an optional product.
That's
right?
correct.
But it gives you the ability to write a loan without the necessity of a title policy.
Correct.
There's still some security in there for the consumer?
Yes, there is. The attorney is rendering a title opinion, and frankly, virtually everything you do is kind of been covered by title opinions historically, and it's just a title opinion on the transaction of the real estate. Gosh, there are so few claims, title claims that happen, and frankly, anything that's there is something that could have been prevented at closing, and just having a careful process and procedure before that can really save the borrower about 80 basis points on a transaction.
Okay, 80 basis points, and for anybody that's not in the mortgage industry, 80 basis points. Loan amount, let's just say $100,000. 80 basis points of $100,000 would be $800. Average loan size in the state of Texas is typically going to be somewhere between $300 and $400. So you're talking about a savings of somewhere between $2,800 and $32 per transaction. Right?
Yes, $3,200 about right.
So I got to talk to David about this, right? Because David, you're on the sales side of this thing, right? What does this do for you?
So excuse me, guys, my head is spinning right now because you are talking you're talking very foreign things to me right now. I consider myself an industry expert, and why is it I'm just now hearing about this? How come no one else talks about this, Jeff?
Why is anybody else doing this?
Yes,
right?
that's what I want to know.
Yeah.
Well, it's tough. I mean, Fannie Mae came out with an announcement in April that they were no longer going to require title policies on some transactions, not all transactions, but frankly, it's about 90% of the transactions. You can't do this on condos, manufactured homes, Texas cash outs. So that it's somewhat limited on that.
Purchase loans?
You can do it on purchase loans.
Do it on a purchase. Refinance?
Refinances, you can do it there.
So cost savings.
Yes.
Time savings.
Correct.
Right. And really the borrowers still have some safety nets here because the attorneys they're crossing their T's and dotting their I's, right?
Yes. And they're issuing an attorney's opinion letter, and that attorney is liable whenever they issue an attorney's opinion letter.
Okay, so David, sales side, you're saving money here. Your head. I know your head.
My head is just. If there is a meme, my head went boom, and it just exploded all over the place. This is why I love working for Click and Close. We are such an innovative company. The things that we bring to market is so far beyond any mortgage company out there.
Yeah.
You know what I love most is the customer centric part of Click and Close Mortgage.
Right.
We're always putting the consumer first.
Yeah.
You know, my team's on the ground floor. We talk to realtors every day. We talk to clients every day.
Yeah.
You know,
including weekends.
Yeah, this is true.
Maybe you don't like to. But it just comes with the title, right?
So
it comes with
you know,
the job.
so what I hear is cost savings. You know, we're delivering a product that everybody has to have if you have a mortgage, but we're doing it at a cheaper cost. You know, we're putting the customers first, which again, wow.
Customer
centric. You know, I can't say enough. It makes me super proud to be part of an organization that's constantly looking at the bottom line, the protection of the clients, the protection of the consumer. I mean, I have a question. Who doesn't want to save $3,200 on an average loan?
I'll take $3,200.
You know, I mean, when I talk about it, it's not just the client.
Right.
It's the sellers.
Yeah.
It's everybody involved in the transaction.
That's right.
So I have to ask, you guys are the expert because I know this is the first time I'm hearing about this. What's the negative? Is there a negative? Is there any negative of this?
I don't think there is a negative. Now, one thing, the reason why I didn't get to explain this before, but I need to. Not every lender is accepting the attorney's opinion letter. Partially, whenever we go to sell a loan, if we sell it off to an aggregator, we could not find an aggregator that would buy the attorney's opinion letter with no extra cost. And most of them wouldn't buy an attorney's opinion letter anyway. I don't get that because, frankly, I grew up with attorney's opinion letter. That's how I cut my teeth in the business, so it makes sense to me. Obviously, there's not a title policy written, so you don't have this insurance policy that generally, to get a claim on that, you've got to file a lawsuit. They don't just whip out their paycheck or their checks and pay you.
Got it. And so, real quick, you own a title company.
I own 3 title.
You own 3 title companies. Okay. And, so essentially it benefits you to have a title policy, right?
It does. Now, we make money off of title policies.
Yeah, of course. Absolutely. Why would you own a business if you were going to make some money,
85% of the title policy goes to the agent that writes it in our agreements.
Yeah. So you're getting 15% on those.
Where I'm getting 85%.
You're getting 85.
Yes.
Yeah, you're getting 85.
And then the title insurer gets 15%. And frankly, the title insurers, they pay out, or they have claims filed on 3% of the
only 3%
of the monies they generate. And
so not a ton of risk in doing the opinion letter.
Yeah, if you run the math, it runs down to less than 1% of the claims that are filed on that. And frankly, the reason title insurance has any claims at all is they cover over things that they're not positive about, but that's close enough and they get enough revenue that they justify doing it.
Got it. So ultimately, it benefits you to put somebody on a title policy.
It does.
But you're bringing this product to the market because it's better for the consumer in a cost perspective, and you're saving people money, right?
Right. And if the consumer is not comfortable with that, we will write a title policy on it. If we're going to write an attorney's opinion letter, we'll write a title policy on that deal.
And you said typically about a 3% risk if there is no title policy.
If you use the math and we get 85% of the revenue, the title insurer gets 15% of the revenue. It's really under 1%.
Under 1%. So there's not a lot of risk in this thing.
That's correct.
Except for you, because you're risking a paycheck. But you're gaining clients. You're providing a great opportunity. And you're one of the few lenders that's bringing this product to the market?
Yes, there are some other lenders, I think, that are looking into this, but as of now, I think we're the first.
Okay, so back to David here real quick. So again, I know your head's, this is a lot to take in, right?
Yes.
We've obviously been writing loans. We don't come from an era where we use title opinion letters, right? So what does this do for you, for your customers, for builders, right?
Sure.
How does this benefit them?
Well, immediately, if you're talking about $3,200 right off the top, that's
an average number, though.
Yeah, that's an average.
That's an average number.
Let's just take an average.
It could be more. It could be less, but it could be more. It's probably going to be more often. Property values here in Texas have risen, right?
Yeah.
Okay, so we're saving money. What else are we doing? Time.
Yeah.
Time. Right. We're saving time. If you're a builder, right? Obviously, not a lot of potential for lien on the back end because you did your due diligence to make sure you were buying clean property, right?
Right.
And typically, the builder's paying for title fees, right?
Sure.
Yeah. So the builder has a huge opportunity here to save a whole lot of money, right?
Yeah.
So and then your sellers, right? The agents, right? That represent the sellers. And this is great for them because now they can bring their customer to the market to a product and say, hey, look, you could save that policy you normally pay for. You could potentially save on that potential. Is that right, Jeff? Or
Yes, you're seeing it correctly.
Wow. That's
Yeah, I know our
Do you have a
audience.
cape back there?
Yeah, I think the big question is, when is this rolling out?
That's what I was going to.
When is this hitting market?
How quick can we get on this product?
Because
man?
I'm pretty sure my phone has already started ringing.
I agree. So Jeff, where are we in the process? Is this out? Are we ready? Are we flying? Or?
In Texas, we're ready to go.
Oh.
We can do this on conventional
You better get that.
and government loans.
So that phone, you better. You know what you're doing.
Yes.
It's going to be a busy weekend.
It's going to be a busy year.
It's going to be a busy year.
It's going to be a busy year. Like I said, this is something that we're delivering to market that I can say I don't know of anybody in the area that has it at this point. So
I mean, when he talked about it, and I secretly didn't tell David, right? Because I wanted we have to have good content for the show, so I wanted a good reaction here. And at the end of the day, he and I have been speaking about this product.
Sure,
I've been keeping it behind the scenes, but now it's ready to come to market. So here we are. I know you're excited, right?
I'm super excited. I can't wait to take this to market. In fact, my call to action with my realtor starting on Monday will be this right here. This will be a subject of communication, and I can't imagine not 20, 30, 50.
Who doesn't want to save people money?
100% of the people will want to take advantage of this.
Who doesn't want to save people money?
Yes.
So Jeff, so you've got this great product. You've got the digital product. You're bringing all kinds of new things to market that make the process simplified for the consumer, right? What else are you doing? What else are you doing over there? You sound like you got the Midas touch. If you touch that mic, it might turn to gold. What do you got going on over there?
No, and I have great people around me that make this happen. Nikki Campari in the title insurance business, she's great.
She's amazing. Yeah.
And Jessica is making it happen as well. A couple other products, the Smart Buy program, we've got that out there that reduces the payments for somebody as they're buying a house with, with limited down payment.
Absolutely.
We can make that work pretty well for them.
Walk us through the Smart Buy. So what does that do for us?
There are a couple of iterations
we
of
know
the Smart
what
Buy
it is,
program.
right? But you designed it, so you know.
Yeah, the initial Smart Buy program is a forgivable down payment assistance loan where we the Rosebud Sioux Tribe make a second mortgage for the borrower that allows him to get into the house for no down payment or a lesser down payment, depending upon the rate. So that's how we structure that.
So no down payment to the consumer.
That's correct.
Or a potential lesser down payment, more money in their pocket.
That's correct.
Right. And what's the risk for the consumer?
Well, the consumer, they need to stay in that house for 5 years.
Okay.
If they stay in that house for 5 years, that second subordinate lien is forgiven.
You give money and then you forgive it.
That's correct.
You're such a nice guy.
Well, I can tell you this, Jeff. I've been using that product since it rolled out. It's a
game changer.
It's a game changer in every
Game
way.
changer.
So those of us in the industry knows that the governments give a lot of down payment assistance stuff, but
right.
this is an internal product for click and close mortgage customers only.
Yeah, that's right.
So basically, we took the best part of what I call that's out there and did an internal Smart Buy program, down payment assistance program. And I'll be real frank with you, without it, there's many families that cannot get into that house.
That's right.
So for me, that's even more special to be able to deliver a dream. The keys to your house, the home ownership that they would have never been able to afford.
Well, and let's talk about that too, because again, we know what the Smart Buy is, but our viewers don't always know about the products that we have available. So this is a great time. It's shameless plug, right?
Sure.
So ultimately, Smart Buy also most of your down payment assistance programs they require for first-time home buyer, right? They require a specific income requirement, right?
Yep.
Ultimately, you have to make less than a certain amount to qualify, and then they've got typically credit score restrictions, which we have credit score restrictions on ours as well. But then you're giving up to 6% concessions, right, towards the down payment. But could it only be used for down payment? No, right?
No, Devin.
Go ahead, Jeff. Yeah.
Yes, closing cost, we can cover those with that as well. But all of it has to go, they can't get cash back. The buyer can't get cash back.
No cash back to the buyer. But I remember last year, when homes were selling well over their asking price, customers had the down payment money, but they could utilize the Smart Buy to bid over the top.
That's correct.
Right? So now they're getting instant equity. They get to take the equity that's in the home they intend to purchase and utilize that to come over the top to win the bid. Now that's not our market today. It may happen again, right? Hopefully not. That was a wild west out there, right? You couldn't get offers done without being, the most attractive offer on the market. But what a cool product now, because the customer that had the down payment money but didn't have the money to come over the top to win the bid can utilize the Smart Buy to win the bid. So they get down payment money if they need down payment. They get closing cost money if they need closing costs. They get the ability to come in and buy over the top if that's what they need to win the bid. And this is a Smart Buy product, and it's exclusive to Click and Close?
Not completely. We acquire these loans through our wholesale and correspondent division as well.
Yeah. And I knew that. But, again, another shameless plug for Jeff here. You've got other avenues on how you can help consumers, right? So we get to use the product. By the way, both David and I work for Click and Close. That is our brand. But we're also, or Jeff is graciously offering this to wholesale partners that can be brokered out to allow this for consumers across the United States, right? Is it limited to Texas?
No, this program is not limited to Texas.
Yeah, we're in how many states?
We are in 49 states.
49 states.
Sorry, Delaware.
Delaware. Poor Delaware. But, so that's the Smart Buy. And just to go back, let's talk about the attorney opinion letter real quick, because I don't think we talked about what states that's smart in. And I want to make sure we cover that too. Does attorney opinion letter make sense in every state, Jeff?
Well, we will acquire attorney opinion letter in every state. The only problem with that is the Texas title premium is a little larger. Yes. Utah's got a high title premium. Those are the two that make the most sense to us for where we do business.
Yeah, and most sense for the consumer too, right? At the end of the day, if your title policy is 20 basis points, ultimately there's not as big of a benefit in there for the consumer, for the seller, for the buyer. But when your title policy is 80 basis points and you're buying a $500,000 house, man, that's a $4,000 savings. That's a whole lot of money that could be utilized in other areas, right? And that could benefit again the buyer, the seller, the builder. There's multiple parties that can have benefit from that.
That is correct. And on the attorney's opinion letter, the Click and Close is paying the cost to get that done. So we try to limit the minimum loan amount to $250,000 by virtue of that for the attorney's opinion letter. We just can't cover those costs if we go below that.
Gotcha.
So big question here. So
let's hear it, man.
So for them to be able to use the attorney's opinion, they have to use Click and Close title?
It would be much safer to do that. Yeah. We would let them use other title companies, but why would the other title company close it? Because they're not getting the title insurance revenue.
Right.
So this is something that we're doing for the customers of Click and Close mortgages.
Okay.
Pretty exclusive.
I can't imagine another title insurance would want to close a loan like that.
You got to join the club, the Click and Close club.
And it's just so much easier for us to use our technology to work back and forth internally to make this happen for the consumer. And we want it. Not only do we want to make it a less expensive product for the consumer, we want to make it a better process as well.
Yeah.
Well, coming from a consumer standpoint, I consider it a symbiotic union. Who doesn't want one-stop shopping? Click and Close is your mortgage company. Click and Close is your title company. You call, it's synopsis. So I think
the technology that's driving all of this is Click and Close. The digital processes that are coming across, right? Streamlining things, right? And let's talk about digital processes, because I know we're doing some things with digital. We talk about some of these products you bring to the market, right? So what about digital closings? I know they're popular now, but you were kind of a driving force in bringing that digital technology to the market, right?
We pioneered that, and I do not understand why everybody doesn't use digital closings.
Yeah.
Frankly, we found it to be a $300 cost savings on every transaction, and we've tried to figure out how to put that back in the price to help our consumers out. And the reason it's easier is frankly the title companies that we close with like it better because they don't have to deal with a whole pile of paper. They just make sure the consumers go into our website and sign the documents, and that's part of we send them an email to say go sign those documents. They can review them a day in advance, 2 days in advance, and look at them. They're not seeing them for the first time at the title insurance company or at the closing.
Yeah. Yeah, so they get to look over everything ahead of time, and then
Correct.
they get to click and close.
That's correct.
It's that simple?
Hence the name.
It's
Yes.
that simple. I love it. David, you use the digital process, and again, I think you've probably got some benefits from that as well, right? How does that help your consumers out?
It's ease. I always say, we live in a technology world.
We do.
And it seems like the mortgage industry is antiquated. We work in an arena where it's such, with the technology we have, that we're still pushing paper. That
Yeah,
we're still
why?
looking at just nothing we do in life is paper, but in our world, paper is still king. And so when I hear stuff like, ease of just clicking a button, going through your email, and just ease of pushing a button.
Transparency too, right? You get to
Yes.
see things ahead of time before you go to the closing table. You know what you're about to sign to, right?
Yes.
And you're not waiting to get to the title company to go through a stack of papers, 240 pages deep, right? That's scary.
Yes.
You're signing your life away here, and now it's a click of a button, but you get to analyze it first. And maybe does that help out with people that are in other states, simultaneous closings, right? You got a seller that's out in Washington because he's already moved to his new home, and you're buying a house in New York, right? How are you in both places at the same time? With digital technology and a digital close, people can be in two different places at once, right?
Yes.
Right.
Yeah. Yeah. So, and there's no more of the, we got to wait for them to mail the docs across the country for this person to sign and bounce that stuff around the table. And borrowers don't know this a lot of the times. They don't understand that the docs all have to be signed in sequential order, and they have to have certain date stamps and time stamps on it to meet compliance and legal requirements. But a digital process makes it as simple as click and close, right?
That's correct.
Wow. That's huge.
And one thing also with the digital close process is we found that there was a lot of back and forth between the title insurance or the escrow agent, the closing agent, and ourselves, and things that we needed that didn't get put in the file during processing, maybe like signed tax returns or an explanation letter. We could just upload that into our signing portal, and the borrower can sign that.
That's
and we
awesome.
don't have to confuse the closing agent with those other issues and drag them into things or send them an email outside of the closing package that doesn't end up in that file that causes a loan not to get funded or the borrower to have to come back.
Okay. So just so I understand this, and again, so our viewers understand this, a lot of the times you've got documents that need to be signed at the closing table, but are not part of the actual closing packet.
That's correct.
Typically, you're going to send the disclosures to the documents to the title company. They're going to remember to have those signed because they sign those every single time. But then you got the stack of documents over here that maybe they saw and maybe they didn't, and they get left behind.
Right. They're in their inbox. They didn't think, I need to put that with this file.
So now because they don't submit those back, there's a delay in funding.
Yep.
And keys don't get handed over
That's
when they're
correct.
supposed to.
And also,
Yeah.
frankly, we fund the loan as soon as they've clicked everything in Mortgage Machine because we know the title company is going to get that security agreement and that deed signed and filed.
Yeah.
So we're trusting that. They've assured us that they're going to do that. And that way they don't have to worry about these other extraneous piles of documents. They just have to focus on that. So they're more focused on what they're supposed to do. So we fund that loan as soon as we've got greens in our signing room that they've signed all documents.
Wow. So the money's waiting.
It's there.
The money's waiting. So again, back to click and close. Literally, they click through the documents. They've had a chance to analyze the documents that normally the title company might have left behind because we sent those to the consumer directly.
That's
okay.
correct.
And as long as they signed those and finished, which we've got Q notes that tell them to do that, the moment they finish the transaction, they fund the loan.
We will fund that loan, and then the title company will have the money, and they can fund it when they feel secure.
Yeah, it's huge. And that's, I mean, you get to experience this every single day.
Yeah.
How do your customers feel about that?
They love it. People embrace the 21st century. It's, I think they're more shocked whenever they have to sign 100 pages on paper. In fact, we get a lot of pushback sometimes that, when that happens. So they love it. Who doesn't want ease
Smooth and flawless closing.
Yes.
Smooth and flawless closing, right? Okay, so they click and they sign, they fund their loan, they're off, they're enjoying their lives, and they saved a little bit of money because we did away with unnecessary costs, and now we're taking away title policy. We're saving them more money there, right? And you mentioned something. I want to touch on. You said you pioneered this product. Talk about that real quick. So, one of the first lenders to market with this?
I think so, to my knowledge. I mean, I know there are vendors out there offering that up, but they're frankly not providing the savings to the consumer that we are. They're hitting them with extra fees or some other things to cover it. So
You really do have a cape back there. I'm telling you. You're out there protecting the consumers, giving money back, making processes easier. And that's why David and I choose to work for Click and Close, right? At the end of the day, when you've got great product and amazing leadership, like our CEO, Jeff Bode here, right? Wow, what a great opportunity, right?
I don't think I'd say that. I think I'm old enough that I've experienced things from when they were this way.
You're modest.
You are modest, Jeff. You are definitely a pioneer.
This is your shameless plug.
Yes.
Talk yourself up, man. So, David, anything you'd like to toss out there, in regards to these great products?
No. I can't wait to deliver the attorney opinion letter to my people out there. Call me if you're in Texas.
I love it. Well, let's talk about one more thing here. So, refinances aren't super hot right now. The rates are up, but how does this benefit a refinance? I have a feeling here this is a home run of a product, right?
It is a very big savings for the consumer.
Yeah. Because normally you purchase the home, you've paid for all the upfront costs, and you've got the rate that you have. But right now rates are a little higher. Down the road, rates drop. You want to refinance, but normally you got to go back and pay for title policy.
Yeah.
And now you're eliminating that.
And frankly, the consumers, if they had a title policy when they bought that house, they still have that title policy.
Yeah.
We don't require a title
protected.
policy for the insurance, but for their benefit, they've got that protection from the title policy from the previous transaction.
That's
Not
awesome.
sure how much that's worth, but they've got it.
Safe and secure.
Yes.
Safe and secure. Okay, so we talked about a lot of stuff here. Is there anything else that we should ask you?
Oh, I think I've told you more than I know.
I don't know about that. You're a pretty wise guy. So, well, guys, how would folks get in front of you if they wanted to know more about your product and what you're bringing out there? How do they get in touch with Jeff Bode or Click and Close? Right?
Yes, clickandclose.com, or obviously call these guys. They know how to get to me.
We do. So, well, guys, I think this is it. We're good.
I think we're
We've
good.
said it all. We've done it. Well, we got more episodes coming
We
out.
definitely have more episodes.
We've got more stuff. Maybe we can get Jeff to come back and talk with us again.
I'd love to. Thank
Jeff,
you.
man, you've been a great guest. We've really enjoyed having you here on the show, and thank you for showing up. But more importantly, thanks for everything you do.
That's appreciated.
Really appreciate it. So, well, guys, we're your real estate success partners. If you want to get in touch with us, it's www.realestatesuccesspartner.com. Again, that's realestatesuccesspartner.com. Thanks for stopping by. Click like if you enjoyed the content, and make sure you subscribe. We really appreciate that. I'm Devin Dubuc.
I'm David Nguyen.
And we're your real estate success partners.
See ya.
Take care.